Welcome to another episode of Should I Invest? And in this video, we're going to talk about Amazon and the spirit of this stock just completely collapsing here. Let's talk about, is it the time to buy this thing? And is it something that you want to add to your portfolio? We got our handy dandy Excel sheet. We have Yahoo Finviz, and of course we have MARKETSMITH, the best tool here to use. You can see it even gives us the cup and handle patterns and the breakouts. It's actually pretty unique software, man. It always impresses me every single time I open a new ticker on here. Okay, so let's get started. We got Amazon up. We're gonna come in here on our Excel sheet, type in Amazon. It's gonna load some data for us, but we're gonna double check. We got market cap right here at 909, shares float and shares outstanding. Perfect. I'm gonna plug all that in. The EPS was pulled for us here. It is a 1.08. That is great. The PE is 82.79, so a little bit higher than we want to, what we actually want, but it's so far so good. Let's take a look. Now we need a return on equity. Okay, so return on equity is right here. For those of you that don't know, it is right over here, and that's 29. So we're gonna go ahead and put in 29. Perfect, nice and green. Now we're gonna head over to total debt and total assets and look at the total debt to asset ratio. So we're gonna go to Yahoo, we're gonna go to financials, and we're gonna go into the balance sheet. All right, so balance sheet we have, let me pull it over here so you guys can see it. Perfect. So we are looking at total debt. Okay, so total debt, it is right here, total liabilities. Okay, let's take a look. Perfect. So we're going to put total debt right here. Total assets we have right here. Perfect. Nice. We got a green figure. All right. Current debt. Okay, so now we're going to look at total current liabilities. We're going to plug that right here. And then total current assets we got right here. Total non-current assets. Total current assets. There we go. All right, we're gonna plug that right there. Oops. There we go. We get another green number. All right. Now we need to look at operating income. Okay. So in order to do that, we're gonna go to finance income statements, and we got to look at operating income or loss. Okay. Operating income is right there. We got 12.97 million, and total revenue is right there. Perfect. So that figure is coming in a little high, and sorry, a little low actually. We want that to be around 15%. So something to note. Now we're gonna take a look at the cash flow and see how they're doing with cash flow aspects. So we can see 17, 21, 25, 14. Ooh, so as of recent, they're actually taking a big hit, and I mean that's relevant when you're looking at the stock's price, right? It's gone from 180. Now currently down to $80, lost over $100 of its share price. So is cash flow increasing or decreasing? We're gonna have to say decreasing here. And number owned by management here. Management has, looks like it says 13%. Yeah, right here, manager ownership is 13%. So I mean that's a positive thing. At least it's one of the highest I've seen. But at least management's putting their money where their mouth is, all right? And funds and fund ownership, is it increasing or decreasing? So let's take a look here. We have the fund ownership right here. December 2020, 588, March 6, 630, 63, 66, 66, 66, 65. So I wouldn't say it's decreasing significantly. I mean, it's pretty steady. I think anyone that came in from September 2021 and onwards really knows what they own. Yes, we've lost a few since June, probably a little bit more now into November, but I think the big chunk of them know what they own, and they know the track record that this company has had. Okay, so is fund increasing or decreasing? I mean, I'd have to just leave it as increasing because I don't really see a significant drop off in numbers, and it was increasing from 5.8 to all the way up to 6.6 here. Okay, so with that said, unfortunately, this Excel sheet has given us a fail here, and it's actually interesting. Seeing the cash flow decrease and the operating income and the total revenues falling at 3% here is the major the difference maker here, and I think it's causing this fail to show up here. We got 1, 2, 3. We got 3 reds out of the entire thing, which could be the problem here. Okay. Regardless of that, again, like I said, this Excel sheet is not a be-all, thing. It's just a very standard formula. It checks how much green and how much red is on the sheet. It's nothing significantly math-related being done on the back end, but you can see that the stock price has dropped drastically. Okay, for those of you guys that are interested in investing in this, we know funds are already in this. We know their total debt to asset ratio is good. Current debt to assets good. So everything in that regard is perfectly fine. So let's take a look at where would be areas of entries. Okay, a lot of people at this area of 100 were entering, right? We can see that was an area of resistance before. This was an area of resistance before broke out, and here old resistance, new support, and now it just broke down again. Okay, so what are we looking at for areas of possible entries here? I think anywhere in this level here, you'll be a little bit safe, and then your next area would probably have to be around the 50s. Believe me, if this thing comes down to 60, 50s, you're gonna start seeing some major buyers kind of step up here, and at that point, you get a pretty good average. This is a stock that has had significant runs from to December 2014 here, sitting at $14, going all the way up to $180. Okay, so again, always dollar cost average. Make sure you are not going in full size. We've seen what the market has done. Names have come down 50-60%. So make sure that you are not going in full pop at the beginning, but ensure that you are dollar costing average. So your first position may be at around $80, and then if it pulls back lower, you can start adding close to maybe 60, 58, 55, and then you can get a nice average sitting at around the 60s if this thing decides to turn around. Okay, and always invest money that you can afford to lose or you don't need for a big investment or something coming down, because these are going to be long terms and you're going to hold on to them for a long time. All right, so if you guys haven't already, there is a discount on MarketSmith. Link is down in the description. $19.99, and you guys can get access to a beautiful software. I love using this thing. Make sure you guys go ahead and sign up and get your free trial there. Not free trial, but $19.95. And also, if you guys have any questions, you have any ticker you want me to take a look at and research, go ahead, drop it down in the comments below, and I'll be more than happy to do it for you. Thank you for watching, and we'll catch you on the next episode.